The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, back in the saddle right here in the office, and it was a pleasure to be away. It's always a pleasure to be back. And let's see, we've got absolutely fabulous weather. We've had great weather here since went down to the Cape Saturday a week ago. It was raining on the way, and then it just cleared up, and it was fabulous. It was a gift, and we took it. So now we're back, refreshed, looking at the markets. Thanks, Tom and Steve, for 2 great hours. Of course, hours go by here. We've got full hours from 9 in the morning till 6 in the evening. Tom O'Brien wraps it up at 4 o'clock till 6 with his Tom O'Brien show. You've got Power Trading Hour with Dave White. You've got, today's Monday, so we have Daryl. Let's see, Daryl comes on. I think he's on up at 1 o'clock. Now, normally, and then you've got Ken Shreve at 3 to 4. Now, the whole thing about today is that I've been given a gift here. I'm going to be doing Larry's show, 12 o'clock till 1. So I'm here from 11 till 1 o'clock at 877-927-6648. Now, if ever you had questions about stocks, 9 hours of programming it is. Thank you. My wonderful engineer just corrected me. 9 hours. That's amazing how we filled it up here. So this is kind of an important session, and I'm going to take the full 2 hours. We're going to go through as much as we can. 877-927-6648 is the number to call. Just going to take the time. Why? Because we're starting to wrap up August, wrapping up the summer, basically. Well, in some places, summer keeps going for quite a while. But I'm still looking at strength, and I'm still looking at a diverse market, a split personality market, a bifurcated market is what they call it on Wall Street. What does that mean? That means that there are stocks that are still generating upside energy. The technicals are strong. And in fact, in some cases, the weekly chart is not that great, but the daily and the monthly are good, and the weeklies are starting to improve. There are cases where there is just nothing wrong with any of the 3 time frames, very important time frames, daily, monthly, weekly. Now, when you're looking at Tiger TV, what you'll see here on the left, this is the Dow. On the left here, then you can see my pointer. That's the daily. In the middle is the weekly. And on the right is the monthly. It's so fascinating to me when I'm doing my chart patterns. Oh, thank you, a couple of people in the end. Thank you. Yep, welcome back. It's a pleasure to be back. It is so interesting to look at the different time frames. For instance, here in the Dow, the daily time frame says, whoa, great action. You held this up channel support beautifully the other day. Let me just make that even. I like to always have my charts look correct. I'm very visual about this. You had the Dow back on Friday, just touched the green line. That's that inside track. You know, my CD introducing the ChapmanWave methodology. Spent quite a bit of time talking about the tracks, how you can have a channel. Within the channel, I have a whole bunch of techniques. One of the techniques is to take the outside lines and try to have a best fit underneath the top one. Usually it's about 3/16, but in this case I've made it a little wider because that's what seems most appropriate. And that wideness says that the high of 13,330 the other day on the 21st of August just touched or might have missed the red line, which is the repellent zone. That whole zone you can see. Every time the Dow has rallied into that zone, where it was 13,128 back in July, whether it was the 13,223 high back on the 13th of August, it got repelled from that line. What's happened is you've got the support line that I've drawn in, and every time it's gotten to the support line, that's been close to where you could buy, depending on your stop, and you could hold it expecting that there was if it closed decisively underneath that, you're out. If it closed within it, it's held that line. That's become a propellant line. Well, that propellant line was touched on Friday when the Dow went to 13,027. not the red line, but the green line. And that's great because it means that it held the inside part of the up channel. Now what's happening is the 9-period moving average, which is around about 13,160 or so. It's been covered right now. Can't see the exact price. That's going to be very important. And what I said to subscribers, my service is called the opening call. It is a really comprehensive look at the market. What if I still got it? No, I haven't. It's a really comprehensive look at the markets, the different indexes, where the Qs, the SPYs, the diamonds, the GLD, the TLT, the TBT, the dollar, whatever it is. And I go through the parameters. And sometimes it's just brief, but it gives you exactly what to look for. I also tell you what to look for. And I tell you what to look for during the day, using different indexes. Now look at using different tools, technical tools. Now look at when I go to the 120-minute chart. Remember, we're looking at the daily, how well it held. Well, the 120-minute chart didn't even get to the 12,970 area, which is the 200-period exponential moving average. It decided it could rally off a higher level. That to me is important. Why? Because it's getting back into this area that I call a rectangle resistance support level, which has been going on since about the beginning of August. You went over it. Now you've gone under. It's like a sine wave. Now you've gone back into it. The big issue now, is there enough strength? And I'll talk about how we look at strength. Is there enough strength to be able to power above that trend line resistance, which will be at around about 13,222? And if it's able to do that, that would be very positive action. I anticipate that if it's able to do that, you're going to see the VIX, the volatility index, all of a sudden, which hit 16.45 twice for a peak D. Now, folks, in my opening call, occasionally I'll miss a letter because I'm doing just so much work. I did miss the letter the other day, and I did correct it. And I said that I had missed a peak C. I said that on Friday. And as a result, that was a peak D, hit twice at 16.45 in the 120-minute volatility index. Today it spiked up over a point at one stage. Now it's up 74 cents. And yet the S&P is up 2.37. The S&P is up 2.37 at 1410.31. Wait a minute. That's not being updated like mine. Mine says it's up 2.37. Let me just double check this to see if I've got the right. I had to refresh some of these. R for a refresh. Yep, up 2.36. Let's see. It says here minus 0.76, and the Dow's minus 4. Well, I don't know what to do. I don't know what to say. Maybe I've got it wrong. For some reason, TradeStation today just wasn't updating the way it normally did. It's usually fabulous in terms of giving you very good data. So I'm going to go with what I see in the chart on Bloomberg, and the Bloomberg says we're down 37 cents in the S&P. Comp index is up 8 at 30.78. The gold is down 50 cents at 16.72. I'm going to go through all this in a moment because we've got leg Ds in the euro dollar, the GLD, the SLV, and we've got. On the way down, it was a trough D, I believe it was, in the dollar. So this is going to be a very interesting session. And what we're looking at is let me just go through it again. Yep. So now you've got gold down fractionally. Silver's up 34 cents at 31.05. Platinum's up 1 at 15.51. Now, this is important, gold. I did a lot of work on gold. Why? Because I have a subscriber who has a particular a copper stock. HCU, which is copper, which has a copper stock, which he's had for a very long time, and he's followed it for a great deal of time. I mean, talking years and years and years. And that stock is often a kind of a clue to not necessarily how copper is going to do, but how well it's holding. Let's put it that way. That's number one. Then I looked at the JJH. I think that was the JJC. That's the copper. Let me go there while I'm talking about it. The JJC. I think that's the copper. Yep, the iPath DJ AIG copper trust, and that's holding well, but it's in a trading range, and that trading range has just been stuck in for a while, making a two cup-shaped patterns here, and those two cup-shaped patterns say, if there is no move in copper, that is the JJC, above the previous high of 45.25 and it's now at 44.01, then it's really stuck in this trading range. Not a great monthly chart, but the weekly chart is the one that might be forming. I'm going to draw an oval pattern right here and show that it might be forming a cluster base formation. I say might. Why? Because it's either a base or it's the inverted Chapman wave stalk leg pattern, and it's going to plummet, and it's going to go down below 41.70, the most recent low for 41.70 in the weekly chart. So this to me is really an important period. Now I'm going to also talk about the TLT. I'll go back to the Dow different time frames, but I want to go through my overview and why my client, my subscribers know that what I'm looking at is to generate as much as possible. And at this particular point on the long side, lower price stocks that can give a very nice percentage to the upside. And on the short side, some of those massive, expensive stocks that are just way overpriced technically and are starting to come down, and we are short those. And we'll see if it's worked out really well so far. I don't know if it's going to continue to work out. The plan is that we will just try to generate that kind of diverse portfolio as long as possible. Now, when I look at the TLT, strong leg A from the low of 120.52 on the 16th of August. Now, for those of you who are new to my work, ChapmanWave is a very simple, in concept, it's a very simple process. In reality, there are 470 slides in my CD introducing the ChapmanWave methodology with many 20-something chapters. But if you go through the CD and you read it like a book, you don't say, I've got to get every single thing. After a while, the simplicity of the pattern it's just beautiful. And if you're able to generate, in other words, in the TLT, made a peak E-top, that's the fifth highest peak at 132.21 on the 25th of July. Well, it came down to 120.52. That's 12 points. It's almost 10%, but at the same time, maybe let's call it about 9-something%. Now what's happened from the 120.52 level, you've got a very strong leg A. The very strong resistance is right there, 126.38. Today's high is 125.70. Well, there's a pattern that I talk about. It's called the single leg A up. When that fails and it comes back very quickly, that becomes what I call an Eiffel Tower, like a capital A. It goes straight up and straight down. That's what the Eiffel Tower looks like. And that is something to watch for. So the level to watch on the TLT for support is 124.28, the 9-period exponential moving average, as 1. But the level that breaks of 123.21, the low to the 22nd of August, if that breaks, that's going to be a big boost to the market because money's going to continue to come out of the TLT, out of bonds. This is the Lehman 20-year T-bond fund, trading at 125.57, up 76. So I'll continue this preamble to taking your calls at 877-927-6648 straight after this very important break here at TFNN.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. And we have, the Den is such a great resource for folks who are either in the Den or folks who are able to archive it when they come back from work in the evening or go off to work. And I had a couple of questions. So I'm going to deal with those questions, and it's all part of what I'm doing here. But just before I do that, I'm going to just show, I was talking about the ChapmanWave. Look, oops, that's a lowercase d. I always use lowercase letters for declining legs down, and uppercase for rising peaks. And the simplicity of the technique is that from a low bar, it's called the most identifiable low bar, you merely count each successive peak, and those should take you to at least a peak D. If you go to the E-minis and you look at the low of 1394.25 at 12:30 on the 13th of August, you went to 1407.75 in a very quick ABCD, 4 peaks to the upside. I have a slightly different way of calculating it in less than 10-minute time frames, and mostly from 10 minutes right through to monthlies. I use the same technique. Then it pulled back to the 1397 level on the 15th of August, and then it made another peak ABCD. Then it made a technique that I use called the ChapmanWave flat base restart. It's actually an unusual, it's an unconventional ChapmanWave flat base restart. There are a lot of terms if you do anything. Let's just say you're a woodworker and you chisel away. After about 2-3 years, the way you use your instrument is completely different to the way you used it the very first week, right? Not only that, you've learned techniques. You've learned to maybe use a particular oil to keep it primed during times you're not using, whatever it is. So this is an evolving process. So it means that the simplicity of the system does become more complex, because I call it the waveform that never sleeps. It means that whenever there is a technical question, or 3 or 4 times out of 5, I suddenly see something has happened consistently that I wasn't expecting. I never even looked for it. It just popped out. And my techniques jump out and say, woo, here I am. I don't go looking for them. I don't even know what to look for. They just pop out like round numbers and all sorts of things like that. So in this case, there was a ChapmanWave flat-based restart which took you not just to D but to an E. And that technique says that no matter how high you go, at some point you're going to come back and retest and probably break below the starting point and then go even higher. When it did that, it broke the starting point, which is down at the 1410.75 level, went all the way down to 1404, and the same technique says in the flat base restart that as you break to the downside, be aware that this is not a complete failure, because there's enough residual strength in this particular pattern to say you're going to go back and retest the arch, the inside of that area that you were in, and lo and behold, it goes to peak ABC, fails at a C, doesn't make a C, a D, but it goes to C minus at 1480 at 4:30 on the 23rd of August, and then slides sharply onto 1398, round number, bounces, flat, it just can't do anything, makes the pattern I call a dreaded H, and then it tests 1395, and that was that low on Friday, and runs up into a sharp leg A. You remember the A that I was talking about? The reason why I'm showing this is I'm going to go to a question in the den about the TLT, the leg A. So this is a technique is applicable to anything, any tradable, anything that moves. It doesn't even have to be a tradable. Anything that moves. Oh, I hope I can remember about that. It's at the Museum of Science yesterday. Oh, I must talk about the chart. Someone remind me before 1 o'clock. Somehow in the next hour and a half. I want to talk about that. So now look what happens. There's that single powerful leg A. It goes 1395.25. Where to? All the way to 1413. Hey, that's a lot of points. Then it pulls back to the white line, which is the 9-period exponential moving average. And now that white line has become the huggable line. It goes above, below, above, below. It goes to a leg B and then pulls back. And now it's in a move up that says, if the MACD and stochastic, this is the 120-minute E-mini chart that you can see here, it says that if the MACD, the yellow and red moving averages here, are able to maintain that upward momentum, and the slow stochastic, which is at high-low close, it's 14.331, 20%, 80%. The MACD is 12, 26, and 9. Those are the parameters. If that can hold above 80%, and right now it's at 87%, there's a really good chance that we will get leg C above 14.16, and then I can expect that there's a good chance that you're going to get a leg D this time rather than a C minus failure, as long as the technicals hold. Now we got another break coming up. 877-927-6648. Now I want to start taking calls, because when we come back, I'm also going to do the TLT, that same pattern, talk about it, and take your calls if you call in.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We're back. Dow's up at 11. S&P's up 4.36. That's what I've got, 4.36. And the comp index is up 14. Now, there are a couple of things that I'm looking at. The question is about the single leg A up. And the question also is, in the TLT, is this an appropriate moment to be looking at a short side? What would you do if you were looking to short the TLT? What would I expect from the TLT? I had a question also in an email about the VIX, the TVIX. That's you can trade that based on the VXX in the VIX index. A couple of questions about my actual service, my opening call. From someone who's just subscribed and new subscriber, and I think it's the questions are very appropriate. So I want to go through these one by one. In looking at my three bears, that are my three bears, they're the three bears, but I call them my three bears because we use them like a little index. That's the VIX, the volatility index, which we call VIXI, bonds, Bondy, the dollar, which we call Dolly. So VIXI, Bondy, and Dolly are really important. Why? Because if they start to pull back, very often it's saying, number one, the volatility index, which is now at 15.78, having jumped very sharply today for no real reason, actually. Dow was only down 30. The S&P was down less even. Went to 16.30 as a high. The high on Friday was 16, and the high on Thursday was 16.45. In fact, it was intraday, it was a double high in the 120-minute chart. So that tells me, and I've been talking about the volatility index being under 20. I actually am now saying just for this period, under $19.20. If it's under 19.20, I'd even say 18.80 to 19.20. As long as it's remaining under there, that should demonstrate some kind of buying pressure, number one. Number two is the monthly volatility index, and we're closing the month. I had my calendar just a few minutes ago. Is it here? Yep. When is the last day of the month? I think the last day of the month is, in fact, Friday. Yep, Friday is the 31st. Well, what's really important, Friday is the 31st, right month? Yeah, August. Well, what's really important is that if the volatility index in the monthly chart closes under the 9-period moving average of 19.47. This is all to answer the question of that leg, eh? If it's underneath 19.47, the low this month has already been 13.30. That is a historic low in the context that you have to go all the way back to 2007. Whoops. Yeah, 2007 to have seen that 1330. Yeah, to see the 1330 level. What was the low there? Yep, all the way back. So when I say historic, I'm talking in the context of a monthly chart. Not only that, all the moves, this is with Greece and Europe and, oh man, everything, the politics, everything so far says that if the volatility index can remain underneath the 9-period exponential moving average for the month, that's good. But what it really says is that if on the last day of the month, Friday at 4 o'clock, if instead of spiking up into the 20s, it remains underneath 1450 towards the 13 area, or maybe lower, I don't know, I'm just saying that, that's going to be very important because the stochastic is making a W formation, which says it needs a little more time to be able to build the right side of the softer W. That's a lowercase w. And the MACD is still very negative. So you can see what I'm looking at here. That's important. That's the VIX index. When I look at the dollar, I want to go through each one of these. They all answer the question. Sometimes a question is a great question because it sets you up for an answer, and that answer has to, as far as I'm concerned, it's not just glibly saying, oh, yes, oh, no, we're going here, we're going there. I like to set it up to be able to say, if such a, I don't know, I can only say that if such and such happens, these are the things you've got to look for. If the opposite happens, these are the things that you're going to look for. In the meantime, you have your positions, you have your stops or buy stops. Let those prices tell you what's next. So this is what I'm looking at. This will be peak D in the dollar in the monthly chart if there's no high above 84.10. That is the U.S. dollar index. And the MACD is still strong and the stochastic still at 84%, so there's still some internal strength there. But it's a lousy pattern in terms of having taken all this time from the 72.70 low back in May of 2011 all the way to leg D, only to 84.10. Every other move has been really powerful from 70.70 all the way, did I type that in? All the way to 89.62. So that 89.62 level was hit. So we go back to, I should put the date, from March of 2008, go all the way to March of 2009, then it reversed course. That was the low of the market. Then it came down on to November, a low of 2009, 74 to 17, ran back up, made a nominal 88.71. It did not make a new high. It failed. And that failure, 88 point, whatever it was, 80 point, I think it was 72. So that high was lower than the previous high, but it went from 74 all the way to 88. That's 14 points. This time it's gone 72 to 84. That's 12 points. It's taken much longer. It is way below the 88.72 level. It was below the 74.17 level of November of 2009. So the dollar so far, and I've called this wheel spinning, it means, in my analysis, that that there is, in fact, and there was federal intervention. This is, I don't know how you can actually prove this. It seems to me that the Fed wants the dollar low, and they've been working very hard because the technicals say that the dollar should actually have been touching the 88.10 level of the 200-period exponential moving average, and it hasn't done that. So I suspect that there has been some intervention. So here we're looking at the dollar week. In the monthly, done okay, but still I would call it kind of a weak rally. It needs a lot more to prove itself. You talked about the ChapmanWave peak Ds. Look at this from the last low of 78.10 on the week of the 2nd of March of this year. The dollar went to 84.10 in July 24th. Leg D, peak D, it's pulled back. It's not a serious pullback. The technicals are much deeper, a deeper pullback than the price shows, and it's got tremendous support at 79.88, the 200 period exponential moving average. But the dollar needs to quickly break above 84.10 to really be showing power in not just the weekly, but to go to the monthly chart. And then the daily chart, I'm stretching it out here. If you're looking at Tiger TV, it's made a trough D. It's trying to rally, but so far that is a pathetic move from the last low of 81.22 to today's high of 81.72. If you really want to be positive, there's a W formation in the stochastic. MACD is trying to turn around. Histogram is still very weak. Until the dollar can break into the 82.60s, it's just going to have a lot of pressure. That says, well, what about the euro? So I have to jump to the euro because I'm talking about the dollar, and this is all to answer that leg A in the TLT. Now look at this. The euro has made also what I would call a pathetic move. It's gone from 1.20, the low of the 24th of July, taken all this time to get to leg D in an up channel resistance. There's that repellent zone. You remember that repellent zone? But the MACD is holding well. The stochastic's at 89%. So that says that at this, right now, as we're talking, although it's a peak D, the euro, the EUR-USD, euro-US dollar currency pair, maybe in Larry's show I can do a little bit more on this. What is showing here is that it is holding well above the 1.245 9-period exponential moving average. And if the euro is able to break the resistance and get to 1.263, somewhere around there, this is the euro-USD currency pair, that'll push the dollar down a little bit further, getting towards the 200-period moving average. So I'm looking at this and I'm saying, okay, so we went through VIXI, we went through the dolly, and now let's go through bonds. If I go to US, I'm just going to go to the U contract for now. It's September. It's still functioning. So the USU is holding very well. There's your single leg A up. And this is the contract, the September contract. The weekly chart made a peak C and then stalled out. But the TLT made, you can get a divergence between ETFs and the core position. And in this particular instance, the TLT weekly went to a peak D. What is required in the ChapmanWave from a most identifiable lowest low? You want to count at least 4 peaks to the upside because that gets you to peak D. At peak D, which we'll see over and over and over again if you're used to listening to my program, that's where you can get the deepest decline. That's what we got, that pullback of 12 points. And now there's a very nice bounce to the upside. I'm calling it a bounce because that 9-period moving average in the weekly chart, exactly where we are at 125.46, it's at 125.64, 20 cents higher. It is saying this is going to be very important. There are periods with the TLT, the Lehman 20-year T-bond fund, actually goes in synchronicity with the market. There are times when they go in opposites, just like the dollar and the GLD. So now let's do this. Let's go to the 120-minute chart because that's the shorter time frame. And what do we have? We have a low at 120.52. We have a left side, right side price time match, which is just unfolding now. And that takes you from there all the way across to there. Give me 1 second. You'll see how some of the techniques I use work. Let's lower it down. That's exactly where I want to take it. Now that's going to be red because everything went down from there. And then it made a low. And now what I'm doing is, that's the midpoint. I'm taking the low as a midpoint. That's called the plumb line in the ChapmanWave. But you can have different plumb lines. They can move. They can move to the left or the right, usually to the right. And what I'm looking at here is to get to the resistance of 126.38, the high of around about the 13th of August. That could take us until tomorrow at 11:30. Well, if it fails from here, which is leg F/B, you will see by the end of the day or tomorrow morning the market going higher and the TLT pulling back underneath the 124.93 support level. And when it gets to 124.50, then all of a sudden, that's going to say, okay, that is weakness. It's the stochastic, which is at 87%, starting to dip down under 80%, and is the MACD going to pull back? That's why I've got an alternate count, because the MACD is still strong, moving average, convergence, divergence, and the slow stochastic is still strong. And that says, I would not be shorting right now, but I'd have my eye on it, and I still would only consider it a short in the context of, is the Dow able to break into 13,190s? Is the S&P able to get to the 1850s, but I'd prefer to go higher to 1490, even 1422. Are they able to do that? That would take the Dow quite a bit higher. Now, the answer to your question, the question is, what would be the best way, or how would you go about treating this as a single leg A in the TLT? And my answer is to do absolutely nothing right now, except if at this very moment, as we're talking at 125.63, you use a short position, and that stop, I would say that the stop, at least for me, because you might have to do this twice, you might have to do it 3 times, because leg A is going to make a peak A at some point. I would say that the stop would have to be I'd have a small position with a wider stop, or I'd have a position with a narrower stop. The reason why I would start a smaller position with a wider stop is I want to see how 126.38, that's only 70 cents away, 70, 80 cents away, how that's going to be dealt with. If the TLT cannot break into the 128.30s, but instead slides and goes to the 125.30 level by the end of the day, I think then you've got a chance of a short that could work. Now let's talk about the single leg A. The single leg A means you will not get that failure when the stochastic is still holding so well at 87%. If that stochastic starts to fail and goes down to 40% of the TLT is breaking down underneath 124.30 to 124, then there's a really good chance you're going to get a test of the gap, and the low there is 123.21, the low of the 22nd of August. So that's the only way I would deal with it. Why? Because in my market perspective, and I keep getting asked, well, will you just give a market perspective? We know that you're looking at a diffuse series of events and stock positions, long and short, but you've only given parameters for the Dow, etc. What is your actual position? My position is that the way that the Dow is constantly tried to treat the 13,300, 13,290 area as a magnet tells me that there's enough internal energy with the weekly stochastic at 93% and the MACD flat but positive. I don't want to go into that whole thing. It takes too long. Rather than let me just say that the difference between the fast-moving average and the slow-moving average is still very good, but it's way below. The two of them together are way below than they were over the peak Ds and Es. So that's very important. And my bias right now is to be looking for some further upside action. I cannot say yet what it is because of that tremendous resistance that's there. If I go to the monthly chart, the monthly chart says that that candle of 13.38, made on the last May, that candle is very enticing to be tested. I'll be back, 877-927-6648, a monologue I'm doing here. Come with your calls. Now, that was the TLT, and now I'm going to talk about the other questions I had as soon as we get back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman, last segment. And then after this, I'm going to be doing Larry Pesavento's show today, Monday, at 12 o'clock noon till 1 o'clock. So I've been going through some of the commodities, things like that, whatever. Yeah, the futures. It's very important that we look at the futures as well as the indexes. Now, what I have here, and this is all part of answering the question that I was asked before. I was asked about the TYX. So the TYX is the 30-year T-bond yield. I was asked about the 10-year T-note yield, and that's in my. If you're looking at my charts, you'll see that the white one there is the 30-year yield. The yellow is the 10-year T-note yield, and the 5-year T-note yield is here. FVX, dollar FVX, and dollar TNX is the 10-year, and dollar TYX is the 30-year. These are the yields. When the bonds go higher, the yields go lower. When the bonds go lower, the yields go higher. Just the inverse proportion. So what we're looking at here is that, you remember the Chapman wave? The waveform that never sleeps? From the bond low back at 25.19 in December of 2008, it went all the way to 48.43 to leg E. That can happen as well. And then it pulled back and then made an inside ABCDE, like a cup pattern that failed. It went down from 48.58 lower to a trough D. Then it went ABCDE again to that whole 48.89 area. Then it pulled back deep down to 26.94, made a pattern that I call the H that goes to an M pattern that fails. What's the pattern? You remember I spoke about it in the ChapmanWave flat base restart. That's the pattern that says you can come down, break below it, but then be careful because you can go right back into it, and that's where you've got to be really careful. You've got to be real careful about where the pullback takes you to. And that's the yield. And that says if the yield starts to, it's a 27.58, 2.758. If the yield breaks underneath, let's see. If a yield breaks underneath 26.19, there's a good chance it's going to retest 24.52. That's going to be very important. So if the yield breaks above 29.84, that starts 29.84. Yeah, that will start leg B up. That's going to be when the market takes a big hit. But so far, it's holding very nicely. So I thought I'd do that. I was asked about the GLD. I'll go through this. You know what? I'm going to put it up here. I'll go through it a bit more in Larry's show, which is called Trade What You See. And I'm going to talk about it because I have cycles that have come up in the dollar. The dollar has failed to break above the UUP. That's the trading vehicle above 23.50. I'll talk about that in the next hour. For those of you just listening to this hour, let me just make it very, very clear. If the Dow breaks under the low of Friday, 13,020. Let's call it if the Dow goes into the 12,900s right now, it's going to test the up channel. It probably will test the up channel support line, which is 12,958. That'll be tomorrow. It's a rising one, so the price is a little higher on the following day. The stochastic and MACD are still quite weak. If they start to turn around, because the 120-minute chart has improved a lot, if they start to turn around, watch to see how the Dow can handle 13,190s. It needs to break and close above it. That's going to be very important. Now, I did not get to the question the subscriber asked. Perhaps in the next section I will do it, but I'll also answer him personally. But most importantly, the trades that you take for my opening call are the trades of the day. They don't apply to the next day as new positions. It's that day, because the next day there's new position, new prices. I want to look at the new prices. That's number one. And number two is, yeah, the E-minis I show them every day. The 120-minute and the 10-minute is to give you a guidance, and the reason why they trade 24 hours a day. Oh, well, not 24, but they trade almost 24 hours a day. And that gives you a much better perspective of what happened overnight. Charts, I do not, of the ETFs and the stocks, I don't look at anything else but the price of the day between 9:30 and 4 o'clock. Hey, thanks for being here. My service is the opening call. Check it out, front page of TFNN, 2 weeks free. So I'll be back straight after this for Larry's show. Dow's up 4, S&P's up 3. And thanks for being here. And I'll be back in a few minutes.